Hey, my name's Kevin Brierton with Neo Home Loans, certified mortgage planning specialist. And today we're going to unravel the intricacies of the home loan process, making a smoother process journey for you. Understanding all these steps that are involved can really transform the overwhelming process into a more manageable and successful endeavor. So let's explore what you need to know. So first, initial conversation. We call this a discovery call. Now, not all lenders will do this. Sometimes it'll be a quick call or a push button, get pre-qual, and they won't take the time to slow down to understand what's most important to you. So what we do on the discovery call is we're going to ask you questions like, what's most important to you about owning a home? Is it more important to you to pre-qualify for the max price versus what you actually want to pay? What's more important to you? And why is that important? So we want to dig in deep about what you're doing and how we're doing it and how we can help you through the process of it. We want to talk about your timeline in the house. How long you be there? 1 to 5 years, 5 to 10 years, 10 years plus. This is all very, very important to help understand what your needs are and really build the program and tailor it to your specific situation. Then obviously you got to get into the facts of, down payment capacity, like how much you want to put down or what's your credit score. You'll also hear debt to income ratio, understanding your debt and your income and how that plays into it. And then what you'll get into is what's called a pre-purchase consultation. So a pre-purchase consultation, at least the way we do it, not all lenders do this, but this is what the ideal process should look like in our eyes, is going through your options over Zoom is what we do. And so what we do is a pre-purchase consultation, going through all the numbers and the process. So we review market and the interest rates. We review the loan process and what to expect and timelines and how to get your offer accepted at a higher rate, all those things, and also a clear mortgage plan. So a clear mortgage plan is going to give you numbers, interest rates, closing costs. And if a lender doesn't give you this information up front, that's kind of a red flag. Obviously, rates can change. And especially if you're in a pre-purchase situation and you haven't identified a house yet or you're not locking a rate, rates can vary. And during that meeting, we go over that information and what the locking strategy is and what to expect. The other thing too is documentation. So sometimes you'll need documentation right away, depending on your qualifying. Sometimes you'll need it after a little while, depending on what you're doing. Generally speaking though, you want to get the documentation up front and you want it to be accurately set up and reviewed. So things like pay stubs, W-2s, bank statements, tax returns, get all of that in is really going to help two things. Make sure you have an accurate pre-approval and mortgage plan. And then you also want to make sure your offer is accepted at a higher rate. In Arizona, where we're at, we're licensed across state lines as well. But in Arizona, we have to show whether we've received the documents as a lender or not. And sometimes realtors won't even accept an offer if the lender has not collected the documents, which is probably the right way to do it. So just collect documentation up front, get it to your lender, have it reviewed, extremely important. And then have that lender highlight. So highlight that, hey, we have got the documents. They're well qualified. That's going to increase your offer acceptance and really help your offer stand out. Maybe from other offers that don't have the right pre-qualification letter. In Arizona, you have to have a specific Arizona pre-qualification letter, and then they don't have the documents checked. It can really affect whether you get your offer accepted if you're using something that's not aware of or able to provide the right documentation that's needed. Now, the other thing, once you go under contract or if it's a refinance, once you proceed with it and you have the information in, you got to get a loan estimate. So loan estimate's required once you're under contract for a house or you have certain data points. You're moving forward. This loan estimate has to go within 3 days of that time period once that clock starts. And the loan estimate will go out to you, and then you got to give what's called our intent to proceed. So the intent to proceed is basically like, yep, I got it. But as lenders, you can't just send out. This all goes back to the old, after the subprime crash, 2008, 2009, Dodd-Frank came in and put a lot of processes in place. Loan estimate's one of them. And then the intent to proceed is another one. So you have to actually tell the lender and document it that you're wanting to move forward. Because in the past, lenders would just move forward on something and the client didn't even move forward. And then all of a sudden they're kind of jammed into something that they didn't even really want. So it's really a good thing for the process overall, because we should get as a lender, they should be required to get the intent to proceed from the customer. And so that's important. And the other thing you want to make sure of is sometimes there's documentation on how when you need to submit everything to the lender per your purchase contract. So you want to make sure you follow those purchase contract rules. If you drag your feet too long to get the contract over to the lender that you pre-approved with, let's say you waited till through home inspection, that actually could jeopardize your contract because you might be out of contract or breach of contract if you haven't started the loan process as soon as the contract asked. A lot of times in Arizona, you have to start it within 10 days, sooner, of course, but it's really, really important that that happens along with the timelines for the contract. Then next is the appraisal and underwriting. An appraisal determines your home value, and it's really crucial for your loan amount as well and your loan approval. So after this, your loan goes to underwriting. Depending on the situation, you might go to underwriting before the appraisal or after, depending on when it comes in. But the appraisal has to go back and also be reviewed by the underwriter. Underwriter has to review your loan, prepare the documents, and then you'll be looking at your final approval. So sometimes you may have floated your interest rate. Maybe you locked it ahead of time, but it's crucial to make sure everything's dialed in. After appraisal, that can change your numbers. So you just want to make sure that didn't change your rate lock or anything too much. And then once you get the final approval, that's going to really allow it to move into the closing stage. So upon reviewing the final approval and clearing all the conditions, this will be called cleared to close. So cleared to close is sometimes a little deceiving because there's usually a few things you got to do at the end of it, whether it's home insurance or a couple easy items or get something for title. But generally, when you're clear to close, you've cleared all the major ticket items that are on the loan conditional approval that you get from underwriting, clearing like pay stubs, bank statements, income review, all the big ticket items. So you'll want to review this with your lender. And then the one thing you'll be getting here now is the closing disclosure. So at that time, when you get the clear to close, you'll be getting closing disclosure. So closing disclosure will look very similar to your loan estimate. So they're almost the same. So that's a cool thing after the Dodd-Frank Act is they required documents to actually look similar. So if you got the loan estimate up front and you got a closing disclosure, in the past, it'd be a good faith estimate and truth in lending, and they were like totally different forms. So very confusing for the clients, and sometimes confusing for us lenders too back in the day. But it's important to know now both documents are very similar, but the closing disclosure will be preparing you to close. And there's certain numbers that cannot change, certain numbers can change a little bit, but for the most part, it's going to be very close to what you're going to be closing at. Our process is we do an initial closing disclosure, then we scrub it to make sure everything's perfect, dialed in for closing. Then we do a pre-closing call. That's the best way to do it, about 2 to 3 days before closing, calling the family and going through the numbers, making sure everything's dialed in so there's no surprises at signing. So that brings us to signing. So your closing disclosures are sent out. Hopefully your lender did a pre-closing review with you and you've received the call, okay, everything's ready to be signed. So at this point, what you're going to do is you should have already reviewed the loan estimate and the closing disclosures to make sure everything's in line with your lender, preferably. If not, and they don't do that, definitely do that. And then the final stage of signing is you're going to coordinate with like the title company or settlement agent, maybe attorney, depending on what state you're in. Every law is a little different depending on the states. But you're going to finalize that. In most states, loans take about 30 to 45 days. Some loans we closed as little as 8 days. So that is a general guideline. The easiest way I say this is, I heard this from one of my mentors years ago to give them props. If you go at 30 days, it's kind of like, if you go less than 30 days, so less than 30 days, it's kind of like a Kid Rock concert where it's crazy, stressful, a lot of stuff coming at you. And if you go just over 30 days, it's kind of like a Kenny G concert where it's calm, smooth, and a lot more under control. I like the Kenny G concert closings more than the Kid Rock concert. I do like Kid Rock and actually went to a great concert with him years ago and he puts on a good show, but I don't want that for my home closing. Now, the little caveat to that is that if you need to close quickly, most lenders, as long as you have everything in line, will be able to close quicker as long as they're a purchase-focused, usually local lender on top of their stuff, able to move quickly, and that's super important. So if you get documentation in and you have everything dialed in, be 15, 20 days, is on the shorter side of that. But again, if you do that, you're gonna have to be on top of your documents. You're gonna have to hop when they tell you to hop. And it's extremely important that you know that. We do recommend, again, 30 days. If you do a condo, a condo, manufactured home, anything that's a little different, or maybe a cabin, build in a little extra time. So build in maybe 40 days or 45 days, because there's something that always comes up. And be mindful of holidays. So this is something extremely important, because you can end up having some days that you can't close at all. Some days you lose a whole, almost a whole week during some holidays. So be aware of kind of the calendar and how you're building now. Very, very important. So thanks so much for joining me. I'm really passionate about giving you information and resources so we can empower you with better decisions. My name's Kevin Brierton, certified mortgage planning specialist with Neo Home Loans. And I'm so excited to help you with your journey and educate you along the way. If you want to connect with me and you want to schedule a mortgage strategy call or learn more, go to mortgagestrategycall.com, and you can schedule a call with us right on there, either myself or somebody from my team. We'll jump on the call 15, 20 minutes. We don't need to pull credit right away. The goal of that call is really understand your needs, answer your questions, and build out a plan. And we'll move as fast or as slow as you need, but super excited to help you out. Thanks so much for watching. We're honored to help and educate the public on these programs and what to best expect when you're buying a house and getting a mortgage. Thanks again. Please like, share, comment if you like this content, and we'll keep it coming. Have an awesome day, and we'll see you on the next one. Take care.